Welcome to a Monday market update, everyone, wherever you are listening or watching in from. That's right, we are available on podcast. So if you are not listening to us through iTunes, Spotify, or elsewhere, make sure to do that. Make sure to download this and listen to it on your walks, on your run, when you get coffee. Doesn't matter. That's what we're here for. I'm going to start on a bit of different track for this Monday market update, and just want to highlight our Trustpilot reviews, because transparency and legitimacy is the main reason why Joe started this business, Crypto Consulting Institute. It's the main reason why I came to work with Crypto Consulting Institute, at least 3 years plus ago. And it's why we have such a strong, knowledgeable team that we rely on, our clients rely on. And I wanted to point you to Trustpilot. If you are ever unsure about our business or, scam accounts, pretending to be Joe or pretending to be one of us, please make sure you're on our correct website. But just broadly, go to this, read the reviews of our current existing clients, including mastermind clients, so they're our advanced clients, as well as VIPs, and as well as anyone who's read the newsletter and whatnot. This will tell you everything you need to know about Crypto Consulting Institute. We are the highest rated crypto education service in Australia, likely New Zealand as well. We're in the top 3 educational companies in Australia, just broadly. So read these reviews if you're ever uncertain, if you're sitting on the fence, if you're sidelined, you're feeling a bit wary, if you've had a bad experience in the past, please read these reviews or post your experience into the free group. That's what it's there for the forum, to the people in there, to share their bad experiences. What learning lessons have you had? And the team as well will read these. And if there's anything we can add to help you, obviously you're not a paying customer. That doesn't matter to us. If we can help someone out, we will. If you want to take that next step, we're there for you as well. Contact the team. But if you're sitting in the free group and you're seeing our post come out, and then you're saying or getting really defensive or feeling that we're trying to scam you in any way, that is not a reflection on us. That is a reflection on you and your own experiences. If there's something you want to talk about, please reach out to us, and we're more than happy to maybe pick apart what has happened to you in the past in a mistake and a bad experience. I've made horrible mistakes in this market when I first started, and it's all about how you learn from it to become a more sophisticated investor. Joe made similar mistakes. We will still make mistakes, but again, it's how we learn from it is what matters. So in fact, I would say those learning lessons from when we screw up and we make terrible calls, we rely on a third party, we're not fully educated around what we're doing. You get yourself into a hole and you don't know how to get out, and you lose money. You learn so much from that experience versus the good times. You learn more from the bad times than you do from the good times. So please share your experiences. Try not to get defensive or lash out. Again, this is a forum for everyone to contribute, and we want a strong positive energy in there. If it's not for you, leave the group. You don't have to see or hear from us again. We're here to help investors from all walks of life, beginner, intermediate, and advanced, become more sophisticated investors and know what the hell they are talking about when looking at crypto, because there is so much misinformation out there. We want to do it in a transparent, legitimate way and give you the best education possible. Those foundational pillars we talk about so often about, in terms of security and doing your own research, due diligence, teaching you how to fish versus telling you what to buy. Those sort of things matter a lot to us. So again, I don't think I can say more here, but please read the reviews if you're ever unsure or concerned, or just all that. Reach out to the team. We're here to have a chat. So that's where I'll leave it. Trustpilot reviews, please check that out on the link below as well. Let's crack into the charts. Now, for everyone listening to the podcast here, I'm looking at the Bitcoin USD chart. And what I want to just highlight to everyone watching and listening to this is Bitcoin currently is trading in no man's land. This is what I told my advanced clients today, the mastermind crew, because we're looking for a solid entry point or exit point, whatever. It's very, very clear that Bitcoin is in no man's land. It's trading between two very, very strong levels. The two strong levels being above, you've got 30,000. So there's a ton of sellers just lurking there and waiting. And below, we've got a ton of buyers that are waiting at the 200-week moving average. So just below, we're not seeing anything here. Just buying here is probably not an option for most people. And for some people who playing the longer game, you may be looking to dollar cost average into a position here, but this is at a key resistance. This is the highest we've been in terms of the market since way back in June 22 when we had the lunar crash. So are you looking to buy at resistance? I mean, you could, but this is an area where we just need to exercise caution. And the best approach to really look at this is, we've got no decisive decision. So why are you getting involved in this area here? You either wait for the fall over when we go back to the resistance below, support below, or you wait for the break of resistance above, and you wait for that confirmation, the flip of resistance into support later. It is just a risk here. And what I noticed though is, and this is maybe the flip side to that, is just how strong bulls have been versus bulls as buyers versus bears who are sellers. So sellers have just tried to move this price down multiple times, and we did have a retracement back down to 26,500. They've tried again up here, 27,500. They've tried again here, 27,600. So each time it's getting slightly higher, and you can see on my chart here, it's a very clear higher low structure starting to build on the right hand side of this, almost like a rounding shoulder, rounding head, rounding top. You could look at it from a multitude of angles, but just very simplistic here. Price is actually climbing while the RSI is actually dropping, which is actually bullish divergence, hidden bullish divergence. So the momentum of sellers is actually growing while price is moving higher. So the sellers really aren't doing a dent. The onus is on the bears here to drive this lower. And the most obvious buy point, area that everyone's eyeballs are glued to is the 200-week moving average down here at around about 25,500. And then you've got the what's that one there? I think that's the 50 daily moving average, a confluent with 2,500 as well. This is an area that's just going to be stacked with orders because everyone expects it. So then you have to start thinking, is this the area where price is actually going to get to? I don't think so, but absolutely could. But regardless, you get what I'm saying here in terms of the heavy resistance above, heavy support below. We're just chopping in the middle. So there's a very low probability of getting in, a trade. If you're a longer term investor, then you can start to think about, again, lowering your average buy price because you missed a lot of traction down here. And action, to really get some good prices is now the time you want to, start to take some risk in the market. I'm just not sure. That's just my high level look at it there. Let's move on over to, I guess, let's just say meme tokens. But what I wanted to just point out is the market environment currently, because everyone is expecting, as Bitcoin moves, we've seen the liquidity environment with Bitcoin moves, then you've got the altcoins that start to, pump higher based on that. And it runs into Ethereum. It's the liquidity flows. Ethereum, mid caps, well, large caps, mid caps, low caps. It's kind of how the bull markets go. This is not a bull market. And I just want to ram that home. We do not have the liquidity in this market to see crazy skyrocketing valuations of a lot of these altcoins. There's just too many and not enough capital. And here I want to highlight an example of that. So Dogecoin in bull markets just can rally like crazy and just keep going on the retail boom speculation. Now, Elon Musk, he's going through a lawsuit because a lot of Dogecoin investors felt like they got misled by his tweets, etc. But he said, either in a tweet or to report, he said, Dogecoin's a legitimate cryptocurrency. And then if we look on over at the Doge chart, Doge was up about 10% based on that. And maybe there was something else on Twitter that I missed, but anyway, it was mentioned by Elon and it was up about 12%. What's happened after that? It's fully retraced. So this is a derivative, so futures, longs and shorters paradise. They're looking for these trades that they can run up with the volatility and then sell into it. Also, potentially some people that bought down here in spot, they're now selling on any pump. 10% pump is a great area to take some profits, and it's fully retraced. This is not a bull market. In a bull market, this pump would have been maintained. It would have continued going higher. There's just so little liquidity. There's only so much money floating around, and it went into Doge and then it flew out. And then if we go on over to Shiba Inu, it did something very, very similar. It had a bit of a meme pump back on the back of Doge. Shiba Inu's got a bit more volatility to it, less liquidity. It ramped and then fully retraced. In fact, it went lower than the pump started. So again, indication that this is not a bull market. Currently we're just not there yet. The liquidity conditions aren't there. So just be very, very careful, chasing FOMO, looking at meme tokens and all that in this current environment. It's something we're just, trying to warn people about. You may get low liquidity big pumps, sure, but they're going to be sold into so quickly as either people take profits or derivatives traders come in and try and short the hell out of it. There's just not the retail, constant retail spot buying behind it to create sustainable rallies. So that's something you will learn in our course through the liquidity flows, and especially as an advanced client, which is always on it in terms of looking at the maturation of the cycle. Where are we? Are we at the beginning of the liquidity cycle? Are we towards the end of the liquidity cycle? And right now we're just coming out of this previous low liquidity environment, hopefully back into a higher liquidity environment. But again, you just have to be very, very cautious being too aggressive in altcoins. All right, coin I just want to quickly show you here is Arbitrum. So this is a layer 2 token with the highest TVL, so total value locked away out of any layer 2 token. So that means the total value of US dollars locked away on it is the highest out of all the layer 2s. Now I will get that chart up again. But why it's interesting is there was an airdrop of Arbitrum not too long ago. There's a lot of talk behind it. It's got a lot of hype, blah, blah, blah. There was, and this is why being on socials and looking at fundamental research is absolutely key, because you had this really nice pump. You could think, oh, we're going for a 2x, blah, 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 because it's a pretty sought after crypto and got a fairly good reputation, etc. But then there was a vote, essentially on Arbitrum Network by the founders, whoever's in charge, and they were looking to do something with a certain amount of tokens, do a token sell into stable coins, whatever. You can go into the deep dive and whatnot. But what happened was they went ahead and did something that they asked the community to vote on before the end of the vote was cast. And the vote went against the creators, or again, whoever's in charge, and they had a lot of egg on their face. They really ruined the trust of the community, from what I can gather. And there was this real epic sell-off. So 20% sell-off on this brand new token, essentially low liquidity on Binance, and it had the big sell-off. So again, chasing FOMO pumps, chasing airdrop pumps, you can get essentially very quickly wrecked. So just be careful. However, on the flip side, for more advanced investors, sophisticated investors and traders, if you think Arbitrum has a future here, a 20% sell-off after a bit of a FOMO pump, maximum fear around the token, there could very well be a pretty strong bounce back here. So some things to consider. You can always evaluate these things on your risk profile. Again, this is what we're trying to teach all throughout the course, is about your risk profile. You're prepared to take risk. Okay, fine. Allocate some capital to that. Take some risk. Potentially gain outsized risk reward. And just looking at Arbitrum here, especially on the daily, was it the daily that I was looking at, because the RSI is not showing up? Yeah, or you can just go to the 4 hour. You can see what I'm looking at here. So this is a bullish divergence. You can see here that the RSI is actually making a lower low versus price actually making a higher high. So, a few things lining up for a bit of a contrarian rally, and that's something you need to be very aware of, that if everyone's talking about something going one way, if you go on Twitter right now, Arbitrum is just getting smashed from pillar to post, there's absolutely a chance here for either a short squeeze or a contrarian rally. It's just very much on the card. So watch this one very, very carefully. All right, let's pop on over to Ethereum very, very quickly. Ethereum's relative strength has been stunning this last year. And guys, I'm giving you a bit more of an in-depth insight here today, because I think we should, and you deserve it. You watch these videos, and I'm going to give you that. And again, if you want to get these all the time, become a client, become a member of CCI, and we'll give you this all the time. So if we're looking at Ethereum here, it's been consolidating above this. Look, I've been talking about it all year. I think my altcoin Bibles are getting above, 1720, so $1,720 US, because it has been in this massive, just ranging range, essentially, and it's popped above it now. Now it's turned this resistance into support. I'll just zoom in here. So this box is a pretty good guide. You've got huge volume support on the right hand side. All these wicks into the underside of it, just blitz through it, come back down, retest it as resistance turn support, bounce right on top of the 100. Is it the 100? No, 21 moving average on the daily. That looks great. If you're above the 21 moving average on the daily, then it's pretty much in an uptrend, which is great. It's not going to take too much for Ethereum to start moving higher towards that 2,000 level. Look, Ethereum's got a lot ahead of it. It's going to catch up to Bitcoin eventually, according to previous cycles. So we will see, but it looks really, really nice here. Apart from maybe short-term RSI looking a little bit weak, it's above those key supports, and that's what you want to see. It's still showing that relative strength and grinding higher. All right, guys, I'll just leave you on this one here. So if you are not a subscriber to our newsletter, you really have to be. Joe does a write-up at the beginning of most of our newsletters. We have a fundamental analysis piece by Tristan each week. He did Ocean last time. We're doing one this week, which should be absolutely insane. I don't know what it's on, so it's a bit of a surprise. At the end of each month as well, we give you signals. So a top 10 portfolio, weightings list. If you're low risk, medium, and high risk, Joe does that all for everyone. Shows you exactly what likely your weighting should be in this environment. Again, a little write up here, and then I do the main pieces down here. So we'll give you a bit of nitty gritty. So this is all free up to about this point here. A little bit further down, there's a paywall. You have to become a subscriber. There's a lot of work that goes into this, guys. So we do charge for it. We think we give you a lot of value. This week just gone by is still super relevant. None of the data has changed. So get onto this and read it. I write all about the return of the golden age, gold 2.0, which is Bitcoin and gold, why they are two sides of the same coin, and why you need to be, I'm not going to say go out and buy something, but I'm going to sort of say that they are absolutely essentials to learn about the value proposition of both and why they are looking to be such a strong performer in the environment coming ahead. And I look at the differences between Bitcoin and gold and why there aren't very much difference between the two, but there are some superiorities, some improvements that Bitcoin makes on gold, which makes it really, really interesting as an asset to watch for the future. And I go on a bit of history here on government issued money, so fiat currencies, how it all came to an end, where I believe the US dollar has sort of started the ticking clock on its reserve status. Also just go over assets, including gold performance, areas of high QE, etc. So it's all about liquidity. A lot of interesting stuff in there, guys. Again, it takes a lot of effort, and I'd love it if you read it and give us some feedback, give us a review. If you enjoyed this episode, I hope you have. See you again next time, guys. The Altcoin Bible is on Wednesday. Have a great day. Bye.